Greetings, market rebels. Welcome to this week's macro measure video combined with the sector situation. It is Friday, May 30th, 2025. It's about 20 after 3 p.m. here on the East Coast. I'm Wayne. Here is Market Rebellion's trusty disclaimer. Here is Market Rebellion's trusty intellectual property rights notice. And here is last week's summary slide for these videos. And on that, I'll grab the laser pointer and see if there's anything that I recall that I really wanted to mention. Yeah, I kind of wanted to mention this, right? That what do you get with NVIDIA? We've been talking about this for maybe even a month, but I think for certainly for 3 weeks that they would not let this market probably go down. Until NVIDIA's EPS were out of the way. And not that that's definitely what kept it up, but I've just noticed that that's something that I feel like has happened several times in the most recent years. And essentially, that you have to wait to get to and through NVIDIA's EPS, and then you actually have a much better chance of seeing some sort of a sell-off. So, or let's say a little bit of a pullback. One, the other, both essentially the same thing. Just depends on degree, depends on who you talk to, all that kind of stuff. Last week we went with really more of a Memorial Day weekend type of approach, and it was really completely real time. Today is almost completely real time. I think there was one other thing I wanted to mention. Yeah, so the short term was suddenly concerning, and I may as well just flip over. We were talking about state of flux, and so we may have had something like that develop, but I think what happened was they erased the short term concerning and state of flux yet again with the ramp job they put together on Tuesday, which is right here. Here's this week's slide. News driven Tuesday goosing, which was day one of the week. What followed to me has really been sort of like trashy action. It just has not been a great trading week for momentum type trading. In most cases, just a lot of sort of holding on to the recent gains, but not really a ton of powering up and through, which a lot of us would like to see, but you can't get it all the time. So we know that. But yeah, we're practically going real time. To step back just briefly, I'm just calling that this week. This slide is the news they can use, and under here, under really refers to mainly underweighting or under impressed, under this, under that. But that to me, we've been talking about that, I think now for, I want to say a couple of, well, maybe a month, maybe a month and a half since the lows were put in. And that you just had these, mainly there's been poor positioning, underweighting. We had a line that was even longer than this one here that I'm mousing over with the laser pointer. FOMO, underinvested, chasing, pain trade, all that. We've had even more there, but I still think, in my opinion, that's the main driver. Because what they've been able to do is, and I think they've demonstrated this to us, and this really maybe could, if people are open to this and you're new, but this could help newer traders, in my opinion, because they're doing what they do best, which is news matters and then it doesn't matter, right? So we saw it this week where they get things goosed on trade news. You go bonkers on Tuesday. It was pretty much relentless. Unfortunately, you failed to break out, but that's something we'll have to wait and get to next week. But most of the post low that was put in early April gains are still being held, right? So that's the good side. They're putting, it looks like a late day goosing together here on expiration day. They're exclamation pointing the entire month right now. Or there's been developments, but there were some rough headlines that I saw that hit the tape earlier that had more to do with with trade and things being problematic, and even some issues with China and so on and so forth. So that doesn't matter, and to me, that's really the story. The story really is the news they can, as we say, hide behind, and sort of we called it the hollow news, and we referred to it as the skirt they hide behind. They use the news to drive what they want to do. And I think it was, I forget what firm it was. It was one of the really big ones you'd all recognize, but they came out a few months ago, and essentially there was a little tidbit that says, well, we try to push stocks where we believe they really should be, right? So you could just take that for what it's worth, but that's been my contention for a really long time as someone who hasn't been in the big, mutual fund slash massive fund world. That's what I think happens with a lot of things. People prefer to mark things where they think they should be, and so you don't really get this natural, I don't know, natural sort of price discovery based upon the things that a lot of people think that you should factor in. And so it leaves a lot of people scratching their heads. And really, the deep pocketed players at the margin, whatever side they're on, probably in the end matters maybe the most, but certainly things like OpEx, this, that, and the other thing. We've seen gamma squeezes, we've seen all kinds of things. And at times that's what really matters. And, I refer to that as the internal plumbing. That's not my phrase, but that's what I've been maintaining in the videos. Well, off camera, so to speak, for decades, but in the videos since we started these a few years back to try to help out each week for folks to come into the week and have a sense of where things maybe are, and let's summarize where they are and what's maybe likely to happen, most likely to happen in terms of a scenario. So getting back to it again, this is almost always stream of consciousness, especially because, well, first of all, that's how I roll, unfortunately. Number two, I just don't have the time, which I try to stay away from mentioning too many times, but there's almost no way around it because I'd like to do so much more with this video or videos than I can at the moment. Anyway, so what I'm getting at is, there was some backtracking and rather poor news about trade, but that doesn't matter. And this is my whole point. The trade headlines they keep used to move the market around. We even sold off late morning or early afternoon, and now we're back into goose mode here late. I think they're almost moving we're at near the highs of the day, and they're not too far away from, if they really goose things, from the highs of the week, which you could think, well, how could that really happen in the last 30 minutes? But trust me, it can if you're new. So yeah, I think that's really the story. They've got, again, the hopium, the rose-colored glasses are holding up, and I still believe it right here. That's why there's these two really subtle, not one, but two really subtle arrows, because I think the realities are the underweighting and the lack of let's say, low confidence or underconfidence, under this, that, the other thing, are what's keeping this going. So it really is sort of that contrarian situation where a lot of people are like, a lot of people are sitting there saying to themselves or even colleagues, can you believe this BS? And that really just perversely helps the gang do what they do best. That's been a massive factor over the years. And we've covered it at times where we really felt as though think that one side of the boat was really loaded up and the other side was practically empty, and how that could really turn the tables and kind of keep them that way. So as long as the underweightings stay as maybe heavy as they are, if that's a way you could even put that, this could continue to keep this market from falling at least. But that's what's, I think, really helped keeping them levitated. As far as everything getting great, this, that, and the other thing, I think that it's gotten better. I've seen a little bit. You have to try to be objective, and I think this week's news on the economic front was a little bit better than what we've seen quite a bit of. Unfortunately, right, are we at that kind of a juncture where it becomes sell on news after a relatively successful earnings season, which I always have to laugh at because they have to keep revising everything down, and they're still doing that for the whole year. And even 26 numbers have come down. And it always works out, though, that there's beat, 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 because they revise down, down, down. And people are always trumpeting how great the year's going to be because earnings are going to be so wonderful. But they rarely, if ever, live up to those lofty projections, yet it doesn't matter, right? This is what I'm trying to emphasize, that it just doesn't matter um, at all. It's really, there's so much more to it than a lot of people, I think, would like to believe or want to admit or are open-minded about. And I'm talking about trading. I'm not talking about investing. I'm talking about what happens really over the course of hours, days, weeks, and sometimes months, more so than years. So I'm not saying that a lot of the important stuff doesn't matter. I think it does. It just takes a while to really reflect that completely in the price because of all these other factors that affect the short term. So let's kind of cover the rest of this as I break off into the charts. And then we'll kind of come back and just make sure we covered everything. But this has been up there for a while now. So I'm going to briefly stop sharing, going to position this somewhere else so it is not in our way. And then we will come back to it if we have to. And I'll pull all the charts over to my main monitor, the center monitor, and we'll go from there. And I think that's going to be number 3 as of right now. So that should do it. So what I wanted to show, I think I may, and I do mean may, I'm not positive. I know I talked about this, but I'm not sure that I showed it. This was out a while ago. This came there. This particular, uh, I guess, post was made by this gentleman on May 19th, but this was out there well before that, is my recollection. I think it was at least a week, if not two. I could be wrong, but I remember, at least in my mind, it goes back further. Anyway, that's the original thing that told me about underweightedness, if that's even a word. And Barclays, basically, this is the one that I found as of today. And so you can see that here's the positioning across categories. So a lot of these, the hedge funds, the macro hedge funds, long short hedge funds, essentially even the investing public, not the rabid zero DTE buyers, but others, and CTAs, risk parity players, blah, 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 right? They're all underexposed in theory, according to Barclays research. So I can't naturally, right? I can't testify and say, yeah, this thing's 100% accurate. I know exactly how it's calculated. I don't know that. But I'm based upon Barclays putting their name on it. Then I'm going to go along with it to an extent, right? And so this sort of emphasizes what I'm getting at. And this is something that I think, right, if they continue to put pressure on people, this is why you keep hearing some talk about this pain trade. And I think that's one reason why they've been able to be in resilient in keeping this market lofty. They had the Nvidia as well, and a lot of trade news has really been, um, let's say, underwhelming, and there's still a ton of uncertainty, and that hasn't mattered. So that mattered before when it wasn't being factored in at all. Now, right, the market's sort of adjusting to the fact that we have this volatile situation with respect to um, this administration and the developments. So I think we've been harping on that because we're trying to talk about being tactical in the short term, and how do you make adjustments and things like that a lot. So, but that's anyway, that is it. So let's get to the charts. And the first one I've got, I'm going to bring over, is the basic chart that we use. And I'm going to note, right, that already have up here essentially the mag whatever 8. I added Netflix in for good measure to try to help the cause. But what I wanted to note, and you have to be a believer in support lines like I am, trend lines like I am. And what I wanted to note is that, this is not a disaster, right? You still have all these rising SMAs supporting all this stuff, and it just made a new high, but it hasn't held. It could break support here. And so, overall, if you ask me and you go back and maybe look at the line on the slide, the final line that I've got for current thoughts, and I'm just going to pull that over here. The final line I've got is, absent seriously negative news developments, path of least resistance remains up. And again, that points to the underweighting, right? So if you ask me about news neutral, most likely scenario, where are we? And I'm going to say when we review everything, somewhat concerned, the Nvidia holdup is over. Now the market needs to stand on its own 2 feet. But to me, right, they've got the still have intermediate long-term trends intact right here. Okay, that's still intact. And the short term, they fixed that and pulled that out of the danger zone with the news goosing that we talked about earlier. So that's what you get. That's where you are. And there are some concerns in the charts that I'm going to share because I was able to briefly peek at them for 10 minutes. But anyway, um, one concern has to be that, yeah, this looks great, but with this maybe like, what would you call it? Sort of like stand on your own 2 feet time for the market. Is this ready to go and continue to lead or power the market? I would say overall the charts look still look very good for this entire package, right? That would be my take on it. But you have to point out objectively when there could be vulnerabilities, and there could be some vulnerabilities. It could start with cracking below this support line, which is anchored off of this candle low, this low on this candle, and then this low here, or right near that on this low here, and then right near this low here. I could tweak it a little bit and get it dead on probably all of them. And so this is not the steepest trend line I could draw. If I drew even steeper trend line, it would also look, even though we just made this new high, it would also look a little concerning. And part of that has to do with if you look at RSI, which a lot of people like to do this, a lot of people are going to see the negative divergence here on this kind of rounding high versus here. And so, and this is really a failure, right, to break out and go as well. So I'm not saying that this is over. I think you're still in a state of flux, but it is worth noting that those concerns are there technically, right? And some people put some weight behind those things, and some people don't care. But that to me is a little bit concerning because why are we not powering, right? Why didn't we keep going? And you could say, well, we're tired. Well, then that means we need to pull back a little bit. So on the whole package, which we really don't trade, but if I were just charting it, I think it's very clear that the 20-day, the rising 20-day there in light blue that I'm mousing over, that's really the big concerning area that opens you up to a lot more weakness, I think. There's just not a lot of price action in there on the recent run, and there's a big gap between those two SMAs with this one being the 100. So I think that's where the trouble is brewing there. But overall, if you had to be objective about it, it's very hard to say, well, it just made a new high and it's barely off of that high and it's terrible, right? It just has some little bit of concerning signs because of the way that it developed and maybe that it became overdone. But if you look at the big picture, right, this looks like it's on the cusp of maybe breaking out. And well, I shouldn't say new all-time high. It looks like it was back there a few months ago, but it got really close, I guess, very within a few points. So which is not much, but this looks primed to the uptrend's intact on the long term. Here's a monthly chart. It looks really good, like it's going to go. But you gotta watch out for these problems because this is you look back on this and then it'll look like if we for some reason get some really awful news developments that reverse this market, it's going to look like a little mini kind of double top that would just fall apart quickly. And we talked about these V's that developed and how V formations and especially in the indices and all that are more of a modern thing. And it's because of the scramble that goes on, the modern reaction time, et cetera. And then them realizing how they can put people in big trouble if people fail to react, like the hedge funds and others that just remain bearish, and how they put pressure on a lot of these managers to really capitulate, all right, when they mark things up. So this is a very interesting situation where overall it's pretty hard to panic about, as I say, a new or practically a new all-time high or being very close to the highs. And yet you've got this little bit of a sort of negative divergence possibly flashing that you're about to crack the support line there that I had drawn, if you believe in those. And for me, the reason I'm saying that is because that's sort of like my first warning sign, right? That's what I use these things for. And so that'll get me ready. And if I'm going to be a very aggressive trader, I'm going to get ready to trade this as a bear if we start having a rough time with this package on Monday. I'm going to wait for now. I don't know where it's going to close. Number one. Number two, it's not that much of a violation of the support line. And the trends are up, up, up. And so we're going to wait. I would wait that one out. But I'm just saying that I'd be ready to go. And if there was some, let's say, not such a wonderful start, I could see a little bit of more of a pullback and maybe you find support near the 20 day. But that would be very aggressive short-term trading. I wouldn't really want to do that. I'd really rather trade with the trend. So having said that, I think it's worth us reviewing some of these stocks that are in here, right? Because that those charts could still tell a story. And so right now, Apple, right, one of the biggest ones is really lagging behind its all-time high by quite a bit, and you can see it has declining SMAs, but it does have a slightly higher low put in. And so could it start to put a little run together and get back above the 50 and start to make some noise? And that's the thing. It could, and it's hanging in there okay right so far today, hanging in there a little bit. So it's still kind of downtrending, so you've got to be, oh, okay, give those trends the benefit of the doubt. But remember, this could start contributing to that big picture breakout of those stocks. And with all those weights, where things are going to go. Look how bad Amazon, is as well, where this really is lagging as well. They get my point of kind of cycling through some of these names is if they get these things to start getting back on track, right? Some of these bigger names, big lagging action still in Google, big lagging action in Google. If they get some of these things back on track completely, right, there's a lot of potential there. Still off by $100 from the 2025 high in Meta. Microsoft, we had paper on. I put a bullish idea in. Microsoft is holding on. This was earlier today. Microsoft is holding on to its gains since the lows extremely well. It's near the highest highs that it's made as well. The market wasn't having it still really isn't having a great day or conclusion to the week with 15 minutes or so left in the day. And it's really right there. It's very close to potentially breaking out. And in the way that I look at it, it's approaching a little bit of overboughtness. But because it cooled off by essentially sidewaysing for a week and a half, right? I wouldn't worry about the fact that it's getting, it's a high 60s, low 70s RSI reading type of a thing. Um, that's really not that bad, excuse me, to where if it's acting really well and the market's going to go, I'd still want to trade that as a bull in a market that's acting well. So I think this one is this I still believe is off of its highs and has some room. I think that's my recollection from just somewhere. I don't even. Yeah, there it is. So it's still a little off the highs, but it's acting quite well. But look. So we only have really a couple. This is one of the few that we've looked at that's not not trading at a real discount. Netflix is another one. It's been acting really well. I put an idea in on this one, but I don't think it's done very much. It's kind of this, as I say, it's been a trashy intraday action. Nvidia, right? It's been a little bit of a disappointment. Gap it up, sell into it, sell on news type of thing. But they've got that back above all SMAs as of right now. So we'll have to keep an eye on that. And the short-term SMAs are rising. But that, of course, is also well off of its former highs. And there's a lot of room, of course, there if they want to start to go bigger in there and start marking that up as well. So that's still well off of its highs. And then finally, what did I have? It was, Tesla. And this is still well off of its highs as well. And they've been trying to regroup in there. So you can see where if they get just, even if right? There isn't disaster in some of these names where they really fall apart and they get some of these working again a little bit better. Amazon, Apple, maybe, Google, maybe Tesla. They could really do some massive damage just with those names in terms of crushing the underweighted players that are out there. And then the buying will get buying, and you'll get this virtuous cycle, if you want to call it that, to the upside. So it's on the cusp, right? It's really on the cusp, but it's also a little bit dangerous, which we ought to jump over now that we looked at those because of their weights. I wanted to take care of those first. But if you look at this, let me get a little bit less time so we don't have to have this mess on our hands every time we pull up a chart. 9 months will do. And here's the SPY. And this, right, this is not that impressive in terms of how did you finish this week? Why didn't you go? It's the same thing really in the Qs where they have come off their highs and they're a percent, the recent high, and they're a percent away. But you have to also look at it like, right, they're still above all the SMAs. The short-term SMAs are rising. They did kind of go into chill mode here, and this is why I'm calling it a state of flux because it wouldn't take much to be full-on bullish again, really on the way to attacking the highs, right? And that's the intermediate term trend. And the short-term trend got out of harm's way by holding right near the 100, 220 last week. And that's what we were concerned about. I think we did note that they reversed it off of there, but it could be back down there. You just don't know what the weekend will bring. Usually, the weekend these days is bringing good news. Trump seems to make an announcement that gets the markets juiced every by Monday morning. But so you could. This is why I would say you're still in a state of flux. But objectively speaking, the way the trends are and how close you are to the highs and how well you've held on to these gains since the lows, I think you have to continue to say the benefit of the doubt due to the underweightedness factor as well. That would still help the bulls, right? So I think overall, that's really where you are. We just saw how some of these bigger names could easily start contributing to the bull case and really help these markets power. If they get those going with all those weights, just think about what could happen. So here's the spiders, right? What do you want to make out of that? Do you want to make a lower high versus here and you fall back over? Or do you want to make this is acting well, it's holding up, even though it failed to really generate a new high and EPS season is all but over? And that's really where the juice comes from. And I think it's too early to tell. And so I didn't want to go with state of flux all over again, but I still think you're right. You're in sort of a consolidation phase, and this could wear on for a little bit longer. We just don't know yet, right? So I don't think you really want to get too committal as a shorter term trader until you start seeing breakouts happening or breakdowns happening. And as I've said many times, there's a lot of SMAs here that should help catch this. But we all know that probably what would drive it down right now would not just be natural selling, it would likely be news, right? Because that's the environment we're in right now. So it would probably take really negative news, in my opinion, to really send this market into a tailspin because they have so many people well, by the jugular. They've got these people in trouble that need to potentially scramble and flip. And so that's been the premise or something we discussed for a while. And that's, I think, continued to help as I keep belaboring. But anyway, if you wanted to get concerned, I think you may as well get concerned at the 20 there in light blue. That's about 581-ish. If you want to start feeling really excited, it's 595. We'll just round it off. And then that to me leads them to a challenge, of the all-time high. I think it should be odds on they get closed above there early, especially like early in the week. They could start putting a 1 or 2 week charge together that gets them up there. Again, it's so hard to say though when you know that the whole trade news, all that kind of stuff can impact at any time. The bigger crack probably happens again below the 100 and 200. The 100 is the lower one, so you'd already be through the 200, and that's at 575, a number that keeps coming up over and over again. So 575, and then as we said up here, you're looking at 595. So that's it. You really have to move a few 1% to the upside and a few percent to the downside to really start getting in a bigger problem there. But you'll know probably before then that it could become a big problem simply because of news. But there's really nothing really bad that I can say other than, yeah, kind of a little bit of a underwhelming week, not great performance, but again, you could just be consolidating and you're still holding most of your gains. And even if you did that for another week, it wouldn't be fun for trading, but it really wouldn't be the end of the world now that you're basically above all the SMAs, especially the long-term SMAs all over again. And to hold up there for a few weeks after the gains and consolidate really wouldn't be bad action. It would be crappy trading action for us, which I never like, but it's part of the game, right? So that's just some thoughts there. Let's take the cues because they were, I think, a little bit more interesting with what they did. And that was that they put together a false breakout on the pop from NVIDIA, right? And then there was a pretty swift reversal there. So again, this is my little reminder. You always have to be when you're breaking out or breaking down, you always have to be on guard for the false breakout or false breakdown. And that's why, right, you have to be really quick about trimming your position. If you're catching the pop, I always take it on a 10 lot basis. I think selling one or two just to lock in a few gains if you get a good pop is not the end of the world because, right, that gives you a little bit more patience on the way down and you can hang on if they pull things back a little bit. But then, right, you might still eke out a small win or break even if they reverse things hard on you. And that's a positive psychological thing. If the stock, or in this case, the ETF keeps going, you still hold 80% of what you bought and you're still laughing, as Larry Holmes said when he was the champ or post champ, laughing all the way to the Lafayette Trust Bank with that paycheck. So you're still happy either way. But in this case, right, not a great look to have a false breakout, a sharp reversal. And I think today you're just getting up. My guess is, without looking at the headlines and breaking up our video, you're getting an OPEX. You're getting OPEX action here. But overall, rising short-term SMAs, flattening to improving long-term SMAs, and a lot of people like those, so I focus on them. And so anyway, the intermediate long term, everything's still up here. They backed off the overboughtness. So again, if they're it can take any news and work with it, they're going to try to go. Clearly, your breakout is this week's high, right? 526.50, and clearly the breakdown has to be the 20-day because it's an SMA of consequence. But as I said, right, you're going to get caught by the 100, 200. That's at 495. The 20-day is at 508. So it's got to fall a few percent here uh, to even get itself in trouble. There's been a nice reversal here. A lot of these Friday reversals, they feel really bogus, but the news has always, well, I shouldn't say always, the news has usually been good. I wonder if that's becoming the trade or people actually know things at this point, just because I feel like it's happened so frequently of late, especially during the days of this new administration. So that's that. There's still a ton of uncertainty. Again, they're ignoring the uncertainty, and it is what it is. But you have to be on guard just because you have the reversal and you haven't taken out Thursday's high. So you have to think, uh-oh, it could turn into like a little bit of a mini double top. Not predicting that. I'm just throwing this out there to just remain nimble because I do think we're in a state of flux. This is also not good, but not bad. And a lot of times, right, it really wasn't a great week. And we're kind of saying we're bullish. We're overall have to be bullish right now objectively, but in this week. But the facts remain that when we can't really get a good lean, quite often, I would say the majority of the time for sure, that's usually the right way to look at it, where you're not sure and you just do the best you can and without a serious bias. And once again, these weeks just keep happening where when we have a hard time deciding, we're calling it a state of flux, which means we're ready to go either way. There really wasn't a great week for these major index ETFs or the sectors. So it just wasn't. You get this one scamper on news on Tuesday, and that was it. And the rest of it really hasn't been all that great. Now, if you want to say, well, I mean short-term trading action that we try to prepare for with this video. And so it just hasn't been good. You got when it's great, you got to say that. When it's not that great, you got to say that. That's the truth. That's just how I see it, though. But you've got this declining 100 SMA here in dash white. That's definitely tamped things down. So for people that question, does that stuff matter? You've got really three, four, five, six, seven close touch or touches, near taps or touches. So yeah, it does. I mean, why? I can't tell you. I guess a lot of people again focus on this. People have been focusing on this kind of a moving average for probably hundreds of years at this point. It's sort of built into the market's DNA until it isn't. So, but I think that's what you're looking for there overall, right? This is a little concerning. I don't feel as good about this as I do other things. I think the potential, I've been really ebullient about, hey, this has great potential if, but it hasn't really looked all that great. And it still doesn't look all that great. And it's not really having the kind of wonderful month and closing out wonderfully the way that they're closing out, say, Qs and SPYs, right? So overall, is it still constructive? Yeah, I would say it is, but it's also a little concerning. You've got the lower high put in, you're getting tamped down by a declining SMA, but really, right, I just think the jury's still out. The 100 is what needs to be surmounted at 208-ish. But if you really want to get excited, I think you have to get excited above 210.13, call it 210, because that's your breakout point, right, where you start making a new high, and that's going to open you up to the 150, 200. So otherwise, right, you fall below today's low. There will be some flatline support in there. I wouldn't dispute that, but clearly the 50 is the big deal, and that's the interesting thing about how you'll be back if you suddenly fall on news or whatever. You'll be right back below the 50. And that'll put you below all the SMAs, and most of them will be declining again. So this is just still not a really, this could easily go from maybe a not such a bad picture to an ugly picture. And it also could start looking quite interesting, right? If it could put together a couple of good weeks and get back above the 200, in a rising market. So anyway, that's where you are. That's where you are in that one. I'm just going to say, check out the 200. Sorry, check out the 100 at 208.16, and today's low is probably the release point at 203.54. But I think another note we've been talking about is it would really be encouraging to see these small caps start to do better, because that would give you the hint, right, that the economy overall is doing better. It's not just big companies buying back their shares, acting like they're making more money, which has been a lot of what we've seen for a long time, along with accounting shenanigans and all the other stuff that goes on, which is not worth getting into. But, and I'm certainly not an expert on it. I've read up on a lot of these things, but a lot of this has really been done that way, and there's been that whole, the whole the Fed goosings, all this stuff, and so I would love to see reality come to Main Street, and that be a bright one, where things are looking really good for some of these smaller players. But I think that's been one of the telling signs, is that it hasn't been really that great out there. And that's one reason why those companies aren't performing that well on the charts, right? The IWM is just so far behind the Qs and the spiders. So it's just kind of indicative of the whole situation, I think. But anyway, the diamonds are a different story. That's kind of the opposite end of the spectrum, and they had an okay week. They held on. You got your short-term SMAs rising. You're not just like the other major index ETFs, because of the cool off the past week and a half to 2 weeks, maybe a little bit more here. This is really primed if it wants to go. And I think your 150 is the clear level, right? That you could say, well, that's really it. Call it 427, but really you're going to need to take these highs out. Obviously, you can do that. You're going to be 429-ish. So 427 and 429 to the upside. Your downside, you may as well use the 20 again, or today's low or Thursday's low, whatever you want. But that's really it. And the 20-day right now is 419.33. So that opens you up to maybe testing this level right here, where there's probably, you were talking about that low at 414 and then the 50-day. But that's the thing, just like with IWM, you fall below the 50 and suddenly you're below every SMA and you could start getting rollover, not just from your shorties, but some of probably you could easily see the 50. If you fell down far enough, fast enough, you could probably even see the 100 and the 50 and the 150 all remain negative. The only one that might still remain positive would be the 200. So you could have a pretty bad SMA profile on the diamonds if things suddenly fall due to, I would assume, pretty negative headlines that are legit that can't be ignored. So we'll see about that, though. I don't know. I really don't know what's going on. It's very hard to get a read. I think Trump, he might like that he's hard to, you don't know what's coming next. That might serve him as a negotiator, he thinks anyway. So whatever the case may be. But yeah, I mean, overall, you still have to say there's a little bit of problem chart here as well on the charts. I think the IWM and diamonds are not quite as far along as spiders and Qs. And so that's sort of another concerning sign that these are not really as technically far along in my book. So I would say, again, things could get vulnerable quickly. So I wouldn't just write things off. Overall, I think you have to, if you're forced to make a call in the absence of news, I think you have to be bullish. I really do. But again, I think there will be news. I think I kind of have a little bit of spidey sense again for the first time in a while. But something's, percolating or something, but I don't know what that is. Now let's get into the sectors. So I want to grab the sectors, and those are going to be right here. I'm going to pull them over. And this is also this, what's that doing that for? This concerned me as well, right? When I took glances at these, throughout the week and then today, I looked at them and said, this is just not looking that great, right? Here's oil, and I've been trying to get trades to go in here, both directions when I've seen paper, and it's really been, again, oil's been a nothing burger. The demand, I don't know, it's a special situation. I always say that it's its own market. You got to pay really close attention, but that's not lighting the world on fire. So energy flowing through the economy. Whatever, not that wonderful. The former leaders, XLK, XLC, right? These are really important. Much like the Qs and spiders, you can't say terrible things about them, but you can see here with this kind of a consolidation we've gone into and sort of a breakout attempt that's failed, you could be in flux again quickly because these lows right here from Friday are not that far away in either one of them, and that you could be right down there on news. And then this whole thing falls apart and this kind of looks like a double top in retrospect. So don't sleep on the risk that's in some of these charts. And remember, these are the leaders. So be careful on that. Now, the XLF, this was a different story. I think this looks a little bit better than other things, but this also did not get back towards the highs. But if you look at it, it's sort of bounced, held, and it's really close to me. Now, I'm not saying this couldn't be in a state of flux either. I think it could, but to me, the fact that this held on the way that it did, and it's really to me like this had a good week with the way that it closed. It closed near the highs of the week, so on and so forth. So that to me looks pretty good that way, and that would be a good sign. But I will not dismiss that this stuff still has that kind of V look to it, and these things are vulnerable at times when you do break below support in these things, which would be last week's low. Should that happen, this could really unravel quickly. I just want to keep emphasizing that point. Um, so consolidating in XLRE, right? So that's not so bad either. You're consolidating. You're also consolidating in these guys, so I don't want to make that overblown. But you can sort of see there how this could shift very quickly in the leadership positions. So you got to be on guard there. Healthcare, kind of a dud of a week. Um, so not a bad thing considering that it's defensive. Staples came back though, right? Look at how Staples are performing. Not a bad week for Staples at all, right? Because they closed just off the highs. They're close to breaking out challenging former highs. Meanwhile, you'd rather see it the opposite way where Staples are receding and discretionary it looks like it's ready to power, but it just did not have all that wonderful of a week. I mean, if you look at it, you practically ended up where you opened. So very little progress was made despite that attempt to get things goosed up this week. So not a great look for Staples. Transports, again, I would say this very similarly, right? And I consider that an important sector as well. Come on, why is it doing that to me? Yeah, I mean that I don't know how you're thrilled about that week. I'm not saying that this little consolidation must end in doom. I'm just saying that it's not as encouraging as if we would have the way that let's say XLF looks with a close near the high, or XLRE with a close near the high, or XLP. And so this is sort of risk off here in XLP, XLY risk on, and one performed well, the other did not. You be the judge, right? XTN, not a great week. Again, you want to see that performing better. You've got your pure hesitation here in XLI and in XLB. So those are both waiting on whatever to start doing something, but there's not a lot to work with. If you have to step away from it and you really need to look at it and say, well, what's your call? What's your opinion? You have to say that's overall, I've got to give it to the bulls because you've had these massive gains off the lows and you're barely removed from the highs and you're holding on to most of your gains, period. Right. So consolidating after this kind of a run for a few weeks, it'll be not too much fun for us in most of the services. The Iron Condor services will do well, probably, but and smart spreads, but the other ones are going to be a little bit frustrating because we want to get more and more and more out of them. XLU to finish up here, this powered towards the end of the week clearly, and it was not having that wonderful of a week. But this worked its way up. I don't know how you want to interpret that these days. Traditionally, you all probably know what utilities represent, but these days with power being what it is, and for all the various modern technological reasons, that could actually be a good sign that it had a pretty good week. I'm going to jump over here. I thought I was jumping over here. Where is my, oh, there it is. It was behind it. It was behind that one. So we've got the diamonds up here, which is just fine, but this is a quick market breadth look. And you can see the breadth, I think, either recovered somewhat or at least improved a little bit on balance. You could say that's the argument you could make with this group of basic indicators that we have here. But it just wasn't right. Despite everything, it hasn't been a light the world on fire. You're not really powering the way you were before. Earlier this year, when we were getting all lathered up about everything, you were definitely making more new highs on balance. You're just not doing that right now. So remember, we're in a consolidation potentially that could lead to more. We don't know yet. So it's not the end of the world if things go into kind of a chill mode, stocks take a breather, not a lot's happening. It's really not the end of all things in terms of this rally. It could still have plenty of life to it. We just want to be open to that as well, despite seeing problems. But right, you're just not a bad little, say, recovery week, but not really something that would blow you away. And I think it's really right in line with the sectors. The sectors kind of told you this was a blah week, nothing great, nothing terrible yet. And this is telling you a similar story, if you ask me. This is my objective take on it. So that is that. Now, when it comes to the other charts we typically look at, the VIX, let's take a look at that one. They've got this one pretty battered back down again, right? So they were toying with higher levels late last week, but they were able to really subdue this thing. We did have a VIX hit this week. Someone did come in for something, so some calls. So that's interesting. But this is back there towards levels we have labeled. I keep these on here because I feel like these are important levels that lets it go from one to the next. Like if it can get through here, there's a much better chance, right, that once it finally gets through the 2475 level, that it can go and start a challenging 30, or falls below there, that it'll come down to this 18 and a half. So I leave those up there for that reason if you haven't seen that one before. But look, we're heading into the summer, and things can get ugly in VIX land in the summer, especially right if there's no uh, impetus, right? There's no catalyst to really drive volatility. And as of right now, other than the headlines, you're going to be in the midst of a time where there's just not a lot going on. So you might end up in terms of that kind of earnings type news. But remember, I do have this note, and I'm going to bring this over right now. And not that I have sources, I certainly do not, but just from looking at some people who probably know a lot more than I do most of the time, um, I would say that this BBB right here, I guess it's that big beautiful bill or whatever Trump's calling it. I'm hearing that it fails. Now I don't know personally. Uh, Washington D.C. not doing a lot to me is music to my ears, because they are the most one of the most incredible reverse Midas touch players, maybe the greatest reverse Midas touch player I've ever seen. But I don't know if the market looks at it the way that I do. So uh, we'll see, on that. But I don't want to. I'm not rumor mongering. I'm just not going into it. But I'm hearing from some players and some podcasts, things like that, that have nailed a couple things like this, that doesn't happen in the Senate. So it might just be a temporary setback, but it doesn't. I'm guessing it's not going to work out the first time at the very least. So I don't know if that's a big surprise, or the market they use that to sell. It doesn't really matter. It's a nothing burger, kind of like the Nvidia earnings were a nothing burger in terms of what the market really did with it. So just wanted to mention that. If you look at so I think the VIX is on the ropes, though. I mean, again, I would say without the VIX, to me, looks bullish for the market. And I think that and I keep doing the same thing over and over again. So the VIX looks bullish for the market to me. And that means that, again, on balance, objectively, I think it's more like again, just another thing that would probably favor bulls. I think it will take news. I just think it will take news right now to really roll this market over. Um, Here's your 10-year yield. That's backed off decently. As of right now, I mean, that is really all the fanfare, right? All the talk about what was happening ever since that reached fever pitch. There you go. Very, very common. And so you end up in a situation where right now that is close to having its own problems, which means rates come down, which means that's a good thing, right? So that's interesting. I don't think it's there yet, but it's very close to breaking support, and it could start to trade lower, and that would really be again, I think that would be a good thing. The dollar, we talked about that from time to time. This also, right, was looking a little bit better a few weeks ago, not so great now, right near the lows. So some people do like that because they like what that does for trade and so on and so forth. Personally, I'd rather have my everything I own denominated in a really strong currency, but I'm again in the minority on that as well. But that is interesting in that that could help things. As I say, the economic data to me has objectively been better this past week. So I think you have to give that a little bit of a nod there. We already took a look at the Mag 8, I guess, and we took a look at those indices. I want to take a look at XAU. Talked about that being bullish, but again, kind of part of the hesitation. We talked about that maybe trying to power and go, but that's not an impressive, really not an impressive breakout of this channel, right? This declining channel that it was in after the big surge. So after you kind of have this flag, this falling flag type thing, you really like to see that next leg start strongly up and through, and it hasn't. You could say, well, wait, it's not the end of the world. It did break out and it's holding above, right where it broke out. It's holding above the top, the now potentially support. It's above the SMAs, all of them. They're rising, all of them, etc. So yeah, there's some good signs there. It's holding, but we just don't know yet on that one. As of right now, I think that still looks pretty good overall. But again, trading it, you have to be careful because this is not acting well yet. If it does start acting well, I think there's going to be a really strong leg that comes from this. So I do keep hitting on that. I didn't even have time to look at any stocks. And frankly, the way this week unfolded, I didn't really have the sense of like, let me share this or that because it was just, to me, it was a trash week. I felt like it was just really just garbage intraday action and not a lot of developments. So let me try to bring our slide back and make sure we've discussed everything. But even XAU hesitating. So you see where you're in. I mean, honestly, I just think you're in flux. You can keep, oh, you know what? One thing we should look at is SMH. And again, I think this is going to show that you're in flux. You are in flux on that as well, right? Because you have this potential double top and your momentum is really tailing off, right? You failed to break out. But you are holding above your 200 in purple, your 150 in rust, your 20-day in is rising and it's light blue. The 100's here in dashed, right? The 50's down here. I'm not going to go into the other shorties, but so the bottom line is, right, the trend intermediate term is up. The long-term trend is really still up in this thing, but it's really kind of unimpressive. And you could see at the moment, you could see how quickly this could start closing gaps if there's bad news about this, that, or the other thing. It's a leadership area, but at the same time, right, it's not in jeopardy at the moment. So that's why this is a great example to me of something where I know it frustrates some people, but there's not always, I don't think there's always an emphatic call to be made on every chart that you look at. And so everybody loves predictions, it seems, but to me, that is not the way to go for real world active trading in the short run. I think you're better off using the charts to tell you which way to lean as best you can in the as things unfold and develop scenarios. And if they start playing out, believe your scenario is working until it doesn't, and then adjust accordingly. But in terms of saying, well, this is going to do this, this, and this, I just don't think it helps you to really get yourself locked into a certain way of thinking of what it really should do. I just have to re-emphasize that, So to me, this with the gap and everything, this is really not an impressive performance. Some people are going to call this an island. You could be right back down with bad news that could develop. Um, don't know what that would be. I'm just saying you still have some SMAs that are not really acting that great just yet. The 100 and 150 haven't completely turned. The 200, though, and the 50 have both done that. So, again, another mixed situation where instead of getting out ahead of your skis, I think you're just better off waiting. But it just confirms the same thing we've been talking about over and over again in different ways in this video. It's just not a time where you could say I don't think you can say that you're not in flux. You've got to see more price action develop to really get a better sense of what's going to happen. And you could very easily be right, very close to breaking out and having another really good run develop, but it might take another week, maybe two. We'll have to wait and see. So on that note, let's try to make sure we cover everything here. So yeah, again, where are we? Have to remain somewhat concerned. The market needs to stand on its own. I think the econ data has improved, but I still think there could be ugly fallout to come. If this BBB thing does fail, does that really create the reason to sell and maybe give some of these reluctant players their chance to cover or at least start getting longer since they're still apparently very underweight, according to Barclays. Let's see. So, yep, state of flux. I could see a lot of things just transforming back, and I think you have tough trading. We're calling it like it is. Intermediate, long term are still up. The Fed is still at odds. If you ask me, I just don't, despite everything, I just don't think everything's just wonderful. Better data for sure. I just don't think it's wonderful out there. I think it could be better. And I think it's given like all the difficulties that are going to develop this year with debt and servicing debt by the consumer, especially in various ways. I think it would be helpful if rates were lower and people could potentially refi or get better rates on this, that, or the other thing. But yeah, I think if you're objective, I still think on balance, if you had to make a call, you have to still be bullish. I just think it's going to take news, as I put down here, and I already covered this. It's going to take news to take us off the path of least resistance. Um, Let's see, we talked about that. No bust out yet. So we got to get the bust out to feel better and say, instead of saying, yeah, objectively we're still bullish, objectively you have to be bullish. On balance, you're still bullish. To get really back to, yeah, I'm bullish. I think the most likely scenario is we power up 2 or 3%. We got to have things start to shape up a little better. And it's hard because of the news driven situation that we remain in. These are fluxy, as I said, kind of me inventing words as usual. But I just don't, when I look at those breadth and sector charts, and I look at other things too, but this video is already too long for most people. Basically, those are just not that great or terrible, right? They're not great or terrible yet. So you could see the vulnerability that could get, as we know, all you need to do is look at last week's video and how the short-term trends were concerning in the market, and then the typical Trump weekend um, release of whatever positive news or news that can be used to create positive market developments. That's what we got. So you get another bit of that, and you could fix those things even more, right? So overall, though, I don't think it was a great week. I do see hesitation. It could become vulnerable, but in the end, they hung on and they held the gains for the week, right? For the most part. So in spiders and Qs, which are really the two top dogs. So it is what it is. It's kind of interesting that other things don't look that great, as we saw. So you get a mixed situation. The wild card is there. If you don't think so, I don't know what to say. I mean, that's clearly just still there. I hate to keep harping on that, but that's where the DDA comes in. DDA means discipline dictates action if you're new. And that's what I'm saying. If you're managing positions, you should just be disciplined. I know there's some information to the contrary and all that stuff, different sources. But, I just feel like when you're in a news-driven market, you don't know what's coming next. So if you can, rather than try to be the hero and really hope everything just keeps breaking your way, especially when you're stuck in a consolidation, you're better off to me being a singles, maybe an occasional doubles player. You win, I mean, hitter, you get those nice little scores here and there. And that's a good way to go when there's not a lot of big time opportunity. If you're still grinding it out, when there's not a big time opportunity, that to me is really great trading. Anyway, my spidey sense is starting a little bit where I feel like there's a little something lingering out there or percolating out there. I don't know what it is. I just feel like there's some offbeat thing that could become a problem. Maybe it isn't. Maybe it's not so offbeat. Maybe it's Diamond alluding to bond market problems. He's been uh, pretty steadfast about that. And to me, given the place he occupies, it's not something I'd dismiss. I mean, why does it's almost like he's making sure that everyone's heard him. It's been, I think, at least 3 times that I've heard Diamond chime in on this. And so bond markets having big problems is a big problem. The chart doesn't look like it right now, but that's the thing. Things happen quickly and they reverse quickly. Again, that's why DDA, again, that's why all the stuff I talk about with being prepared to take evasive action, right? In other words, play defense when you have a plan in place. So, but listen, I did talk about my own Spidey sense a while last summer, and there was nothing but nothing burger. It really was a nothing burger, and that's rare because usually when I get the Spidey sense feeling, something usually justifies that. But this was a time that I got that. It was fairly strong, not super strong, but it just didn't. Nothing really happened. So I don't know why. Maybe time will tell. But yeah, so we probably ran a little later than I wanted to, but we covered a lot of charts this week just to kind of hopefully prove that it's not a pound the table time just yet. Let's let more price action develop, and then we'll go with that rather than sort of forcing something on. I think the market needs to show us its hand before we start to play our hand and maybe overplay our hand. So let's just be smart about it, and let's let these developments come, and then we'll react to them. But I think you could easily be challenging the all-time highs without bad news. So that's my final statement on that. I'm objectively bullish, but I'm just fearful of news. And so if you want to play the market, I'd play it as if I had to play it, I'd play it as a bull, until further notice, just because I think that the pain trade is probably the main driver at this point. But there's enough vulnerability in these charts right now to give you a little bit of pause and keep your discipline high. So on that note, I'm going to wrap things up. I'm going to thank everyone for tuning in. I do hope that you got something out of this video that will help you in the upcoming week or some week in the future. And again, my thanks for tuning in. Have a great weekend if you catch this video early. Take care.